Hey, what's up, traders? It's January 27th, 2021. In this video, I'm going to be talking about the S&P 500, the Dow, and it's so funny, man. I went over on our group trading call, my accelerator, my mentoring and funding program. It's holy shit, it's snowing outside. It was like 60 degrees here yesterday. Anyways, I went over all of this stuff, and I didn't think it was going to turn around this fast. So I want to teach a little bit of that to you today about the correlation between risk averse assets in terms of the dollar and particularly the yen and how that relates to the US equity markets. Because like some people would be like, I just like to trade Forex, how, I'm not trading stocks, I don't know anything about them. But the thing is all the markets, including commodities, oil, gold, silver, metals, they all correlate to one another. And as you start to move down the line as a trader and start to become more experienced, that your knowledge of these should grow, and you can be able to start to see how everything is just tied together, and it's just this massive flow chart connecting one thing to the next And I'm going to show you that today in this video. So it should be pretty educational for you. Of course, I go over this in much more depth within my training. So if you want access to that, click the link below to check that out. And I go over pretty in-depth risk on, risk off market correlations. Excuse me. So here we are, we're looking at the US30, which is the Dow. And I thought this looked the weakest out of all of the indices. And this is what I pointed out to my mentoring group yesterday, right? So this was what we were looking at yesterday here, and we'll do a little back testing. One of the most important things as a trader that you can do is back testing, right? So this is January 17th. So here we are, we're pinned up against this level of resistance here, creating a throwover situation. And here comes the throwover action. So this is, in my mind, looking that the market's starting to get exhausted. So we have false breakout here, and then a breakdown, and then another push above that. And here we are into this zone, creating another pool of liquidity here. And a lot of people are starting to buy. We're getting a lot of the euphoric buyers here. And so this is where we were today, right? So this is today's price action. And so now we're back inside this level, this area here, right? So what do we want to look for from here? It all depends. Is this going to be it? This is the US stock market, and it just has a tendency to just go up no matter what the hell's happening with a big correction. This was, of course, the COVID ridiculous sell-off and shutting down the economy and everything else that has devastated the country. So let's just hope that, for the sake of hoping that, we don't see some more action lower here. But I'm not ruling it out. And, 30K, 30,000. And just talking about this with Mark in my chat room, 30K seems like a pretty realistic target. And great job shorting this, buddy. You nailed it. Almost looks like we're creating a bit of a double top here. I wouldn't be surprised to see a recovery. Something like this. If we do move lower, and this would clear out these areas here. So the US30 is a great indicator of this for sure. Now check out the SP500. Now this thing just boom, right? This is our daily candle, super bullish, our bearish candle here, right? And so this was our price action of the day. There's a couple different ways you could go about this. You could have this wedge going all the way down here, or you could have it from here to here, but we have a throw over here. We have an ascending wedge. Could even be a channel type situation, with this being a false breakdown, which it was, right? If we were to go that route from this fractal point here, we'll go from this fractal here, the former low, to high. Now, if we were going to put ourselves in another shorting situation, I'm actually looking to buy this at 37. I have a pending order at 37.20, looking to buy the dip here. So we'll see if it happens, if I get ticked in. I really hope I do. So, right. Oh, it looks like it's already happened while I was on here. Hell yes. Okay, cool. So we'll see how this plays out. And that was from this market imbalance right here, this IPA. So that being said, anyways, I'm starting to talk to myself here. So this is what we're looking at in the indices market. And so the question is, how do we play this? So what's that have to do with trading Forex? So now we're in a great trade in my VIP group for NZDJPY. This is played out super nicely, right? So this is our liquidity here. Touch, touch, touch. And we actually, you can't even really see it on this broker, but there's a big gap here in the market right there. So we had a pending order 75.05, minimal drawdown, and we're at a 1 to 6 risk to reward here. So if the markets keep going like it is, this is it's going to just pick up speed, and we have a 200 pip take profit down here. So really feel really good about this trade for sure. So, but the thing is, why is this correlating in the way it is, you might ask yourself. So, when markets are risk adverse, in other words, a big sell-off here in equities, when there's some sort of global uncertainty, some sort of war, some sort of bombing, some sort of economic disaster, some sort of election, which surprisingly, this thing has just been moving up and up and up. Despite COVID, which that should be an indication of how serious it really is. And if the market, because the markets never lie, right? So this is, if you want to learn anything, man, what's going on, follow the money, right? And so the thing is this is COVID. This is the massive breakdown. Well, markets and the big money and the people at the top are still making money. So really, it's not that devastating, despite what they're saying on the news. That's just the way it is, whatever they're saying. If it was horrible, right? Not saying it's not bad, but if there wasn't more to the story, then the markets would be in a seriously worse condition. So, but the thing is when we get some sort of risk adverse situation in the markets here, people want to pull their money out. They're like, oh shit, I can't just keep investing in the SP500 or banks as well, right? This is the Nasdaq, right? So a lot of these companies are starting to get under a fair bit of scrutiny right now. So here we are, right? Here's the Nasdaq, right? So people are going to start, panic selling. And where's that money going to go? Where are they going to keep it? Well, they're going to look to put it in more safer assets. And what is a safer asset? We do have the yen is considered a safe haven. We also have the dollar, right? So let's take a look at just the benchmark for the dollar. Euro USD. Surprisingly, I want to give a shout out to Pete in our chat room, and he caught this move here. We got a big move to the downside and a little bit of a recovery here. So not the best example. We can see Aussie US dollar. This was the move I was looking for. I went over it on our accelerator call yesterday. We got this move here. So when the dollar has been just weak as heck for so long, pound dollar, here, we're not seeing as big of a turnaround here as we are in the yen pairs. So here we are in a trade with Aussie yen. So you have to find the clues, find out where the pieces of the puzzle fit. And now, remember in the first video, I talked about money flows. You have to ask yourself, well, man, where is this money going? So right now, it would appear as though it's headed to yen pairs, right? This looks like a pretty extreme breakdown on Aussie yen. So if we get, I think this is going to be a great situation to sell some sort of rally. So clearly it's going into the yen pairs. GJ has been, man, I've been warring with GJ. NZDJPY looking great. Now remember at the first of this, I talked about a throwover like situation, right? So we're from this top here, we created a level of resistance, top, and here we are, false breakout at the top there, which I like to designate with a red flag. So if you remember anything from this video, when you start to see risk adverse conditions within indices, look towards the yen and look towards the dollar. And last but not least, a false breakout typically leads to some sort of breakdown, which is what we have on our hands here with GJ. It looked like this was going to happen this was earlier today. This morning, price broke down, and then one last push to take out all the sellers. And here we go, because I thought it was going to happen here, but here we go, and I bet we're about to see some serious downside here in GJ. So hope you found this video helpful. Hope you learned something. If you'd like to learn about these concepts in depth and in more detail with more instruction, and be a part of my awesome VIP group where you can learn, beginner, intermediate, advanced, or also my more advanced series and accelerator group where I will teach you personally and mentor you how to get funded and take you through a step-by-step process to figure out a trading style that works for you, and then to nurture that and to make it happen. So click the link below to get started. I hope to see you in my VIP chat room. Have an awesome night, everybody, and I'll see you in the chat. Peace.